Hello and good morning, Impact Money viewers. It's always a pleasure to be with you here today from the Washington Capitol. Welcome to the show, broadcasting live from the pulsating, chaotic epicenter of Washington, D.C. It's 6:24 in the morning on March 25th, 2025. And if you're awake with me at this ungodly hour, you're either chasing the next big financial jackpot or dodging the debris of the world spiraling into madness. Most likely both, because that's how we thrive in this town. Let's kick off things with the weather here at the nation's capital. It's a brisk 42 degrees Fahrenheit outside with a gentle northeast breeze rustling the cherry blossoms along the tidal basin. Those iconic pink petals are just beginning to bloom, a sight that'll soon draw hordes of tourists with their wallets wide open, which will be a good thing here, let me tell you. The forecast calling for a 40% chance of showers by noon, maybe a light drizzle to send the power suits scurrying into cafes, plodding over $6 lattes and $10 artisanal scones. But don't let the calm fool you. DC's news is raging wildfire. Yesterday, a bombshell landed, a violence interrupter from the Cure of the Streets program, hired to stop gun violence, was arrested for murdering Blake Bozeman. Not funny. Shot dead over a year ago at an H Street Northeast nightclub. It's a gut-wrenching twist. Someone paid to heal the streets allegedly pulled the trigger, and it's shaking trust in public safety to its core. Local businesses are feeling the heat. More on that in a minute. Meanwhile, a religious leader rallied outside the Capitol on Thursday, vowing to fight Trump's federal jobs massacre. And the Washington Nationals just unveiled a $20 million cherry blossom themed City Connect uniform set to debut Friday against the Phillies. Even baseball is cashing in on DC's soul. The city's pressure cooker of money, power, and pandemonium. Folks, we're diving headlong into the chaos. It's early when I started putting this show together, 5:23 in the morning. So the news is still unfolding like a slow motion car crash. But the last 24 hours have been a tsunami. Let me just open up my thing here. Of stories that'll jolt you awake faster than a triple espresso spiked with jet fuel. And I've got the full scoop on what shaking the markets, rattling power structures, and moving your money from DC's marble corridors to the farthest corners of the globe. Let's start with the man who never's far from the headlines in this town, Donald Trump, the 47th president, back in the saddle, and he sure is stirring things with a vengeance. I am still getting used to these new controls here. There we go. Trump's latest moves are pure dynamic, folks. They're lighting fuses from Wall Street to the White House. On Monday, he dropped a blockbuster announcement of 25% tariffs on countries who are buying Venezuelan oil or gas. Set to slam into effect on April 2nd, 2025, branded the Liberation Day in America. With all the bombast of the campaign rally. Oil markets flinched. Brent's hovering near $73 a barrel. WTI is climbing above $69, and Wall Street shrugged it off, trading higher. But analysts see this as a sniper shot aimed at China, already buckling under U.S. tariff pressure. Interesting, right? Then there's the Yemen fiasco. Trump's official accidentally texted war plans, top secret war plans for strikes on Yemen to Jeffrey Goldberg, the Atlantic's editor-in-chief, via a Signal chat group. Trump waved it off Monday, claiming he didn't know a thing, but House Minority Leader Hakeem Jeffries is bellowing for a congressional investigation, and Defense Secretary Pete Hegseth brushing it off as a misunderstanding. A security slip-up or a sitcom plot gone rogue. Either way, it's got DC buzzing and markets twitching. Trump's tariffs chatter doesn't stop there. Reports suggest his broader plan might be more surgical, giving stocks a breather, with Rolls-Royce eyeing U.S. factories to sidestep the duties. Truth is, though, we get a president for 4 years, and so, is that going to continue? I mean, this is the talk around town. Trump teased flexibility on reciprocal tariffs last week, but America first remains the gospel. Oh, and Louis DeJoy's out of the U.S. Postal Service head amid Trump's overhaul push. While a judge tore into the administration's Venezuelan deportation, saying Nazis got better treatment during World War II. Trump's also prodding the Fed for rate cuts and floating U.S.-Ukraine mineral deal. More on that soon. Now let's pivot to Elon Musk, Trump's right-hand man, disruptor in chief, and lightning rod, who's electrifying DC's chatter. I'll tell you what, he's got everybody here talking. Everybody. Tesla's under siege. Literally yesterday, reports hit the Cybertrucks being torched and Molotov cocktails lobbed at showrooms, tied to Musk's role in the Department of Government Efficiency, or DOGE, slashing spending. Musk hit Fox News with Sean Hannity declaring, deranged protesters want to kill me, and it's a wild pivot. Tesla's once progressive shine is now a political punchbag. Trump allies are begging the White House to gag Musk after he trashed Social Security, shutting offices, axing phone lines, clashing with Trump's hands-off pledge. A White House insider swears Musk won't sway policy, but the tensions are thick. On the flip side, the Financial Times says X's valuation soared back to $44 billion. And the man did it. How about that, huh? Musk's 2022 buy price of $44 billion is now what the platform is valued at. Of course, one of our biggest platforms. We love X. Love Twitter. I always love Twitter. Thanks to his Trump alliance, they're saying, even as Tesla execs dump $100 million in stocks since February. Musk also threatening to sue ex-rep Jamil Bowman for calling a Nazi and a thief on CNN. The lawsuits inbound, he says, over on X on Friday. Those federal cuts, they're a sledgehammer to DC's guts. I don't think most of you guys realize what is going on here in Washington, D.C. You may be able to feel it a little bit, but here in D.C., these cuts are pretty major. I'm not saying that they shouldn't happen, but it's got, people don't know what's going on. They don't know if they're going to be able to pay their bills. They don't know, any of this stuff. And I get it. Totally. That's how everybody's been feeling, right? But in DC, that's not a normal thing. They're a sledgehammer to DC's guts. Trump and Musk's Dodge rampage has hacked away over 20,000 probationary workers since January 20, while 75,000 more took buyouts, per Reuters. Yesterday, the White House pleaded with the Supreme Court to pause lower court ruling forcing 6 agencies to rehire over 16,000 of them. I mean, these lower courts are out of control. The Supremes haven't ruled, but they do have a 6-3 conservative lean, but it's still a toss-up. Some agencies are bending. USDA is bringing back 5,600 workers that were fired with back pay, while others quietly recall key staff, 180 at CDC, 84 at NSF. Trump shifted Thursday, saying cabinet secretary should cut with a scalpel, not a hatchet, but warned if they don't, Elon will. Musk claims he doesn't fire anyone. Agencies do, but unions are suing, arguing DOGE overstepping. The local fallout is brutal. DC small businesses are bleeding out. It is a fact. A DuPont Circle Cafe owner told me, no feds, no tips. My rent's $5,000 a month. I'm down 30% since January. Unless something changes quick, we're going to see a lot of these people close their doors. Congress isn't snoozing. They're wrestling with the stablecoin framework to balance stability and innovation, per X post. Trump's tariffs flex and that Yemen leak have Democrats like Schumer and Jeffries pushing for oversight hearings. Up at the Supreme Court, they tackled Louisiana's redistricting yesterday. 2 majority black districts on the line, and Trump's team begged the court to freeze that worker rehire order. The 1798 Alien Enemies Act is heating up too. A D.C. circuit panel heard arguments Monday on Venezuelan deportations. It's so funny. Like, the last administration can literally fly in hundreds of thousands, if not millions of people, but to flying them out, oh gosh, God knows we can't do that. That's illegal. calling the courts. Globally, Ukraine war rages on. Yesterday, U.S. and Russian negotiations met in Riyadh for Black Sea ceasefire. Russia's Sumis strikes wounded 88, while Ukraine downed 97 of 147 drones. Putin's talking peace but swinging big fists. Gaza's tragedy. Israel's airstrikes since March 17th killed 404 in a day. Toll past 50,000 dead people over there since 2023. I know, those are the numbers out of the Palestinians. But cut it in half. 25,000. Most of them women and kids. Limbs blown off. It's just horrible. The UN's calling it out genocidal acts, while Trump's February plan to take over Gaza keeps the fire roaring. Putin's gifted Trump a portrait yesterday, but Ukraine calls his peace talks hollow. Markets, Bitcoin at 86, 87 right now-ish. Down about 0.4 after yesterday's 88,800 high. Expect chop between 86,000 to 88,000. DXY is up slightly as I put this together. We'll talk more about that. DXY is now moved down as well. Futures have started moving towards the upside. Gold's at 3,024, up 0.29%. That's probably moved up a little bit more. Silver's up also at 33.49. This was about an hour ago when I put this together, 0.68%. Apple's eyeing AI smartwatches. It really is just really taken off. AI is unbelievable. That's my word for today. Let's call on the great Matt Dixon with our Market Watch report. Sir Matt, how are you?
Hey, good morning, Bruce. I was just looking up some interesting stuff. Might touch on it. Let me just get over to you there. Yeah, so there's been, I said yesterday I was going to take a look at the longer term view of the markets. So actually, I'm just, like you, getting used to my controls, I'm afraid.
Yeah.
It'll be way too long. But anyway, let me just get this sorted out. I think we're there. So I'm sharing my screen, first of all, looking at oil, because you just mentioned oil.
Yeah.
So, of course, oil is driven by mainly supply and demand, but these geopolitical tensions, whilst it may not immediately affect the supply and demand, I think that's what's pushing prices at the moment, because we're actually seeing demand failing a little bit because we're seeing some slowing down of economies. We're seeing plenty of supply, and yet we have seen, and actually it's amazing because it coincides with this support line that we drew in a couple of weeks ago now, maybe a few weeks ago even. When was it? The support was actually back in September, but we retested that support quite recently. Early March, beginning of March, we retested support. And I said that would be quite a significant level of support there for the oil price. And, right on cue, oil price bounced higher. Now, this is a long-term chart, relatively long-term anyway. I'm looking at weekly chart. What that means is that each of these candles represents 1 week in time. And so following this red candle down, which actually had a bit of a shadow below, or a wick, you might call it, on the candlestick, that was telling us that the price tested lower, it failed and went up a bit higher. And then we got what's called a doji, where basically price tested lower, price tested higher, and ended up in the middle. So the candle body was virtually non-existent, just a wick above and below. But that was, again, telling us that the market was a little bit undecided, but actually there was some signs of a turnaround there following our prediction that this could be a turning price for oil. Following that, we've had 2 solid green candles. And that's telling us that the price of oil may have bottomed and may be headed higher. So I looked at the long-term chart on this. And as I say, it said yesterday, I'm going to look at longer-term charts today in general. So we could actually be in process of a triangle here. So a triangle is made up of an A, a B, a C, a D, and an E. And they're basically corrective waves within the triangle. So we can see that these are corrective waves they're not impulsive within the triangle. So even here, this wave up here overlaps this wave down here, telling me it's corrective. So we've got an ABCDE triangle. Triangle is a pre-terminal wave. So it comes before a terminal wave, and the terminal wave will be an impulsive wave in the opposite direction. So this is known as a consolidation. So the price consolidates, and you can see it's been moving, it's quite a big range, but, it's drifting sideways and down a bit, and it's actually what's called a bull flag. So you've got the flagpole here, which is this rapid price movement, which has peaked in the beginning of the Russia-Ukraine war, around $130 a barrel. And since that time, we've been drifting lower in this triangle consolidation formation. And there's some fair signs that this actually may be over now. And we could now be beginning to push to the upside and potentially much higher to the upside. Now, what would push the oil price higher? Now, as I say, it could be demand.
It could be these tariffs. So Trump now is putting tariffs. I don't know if you heard it in the opening monologue. He's putting a 25% tariff on all the countries who buy Venezuelan oil. I mean, that's
really interesting. I did
really is in there. In the kind of the subnote of that is, I guess, China is buying Venezuelan oil.
Yeah, so I did hear that, and I thought that's really interesting because it actually fits together with a number of other things that's happening. Trump has also imposed further sanctions on Iran. So clearly that's going to limit oil production, I guess, and certainly oil coming out of Iran, it's going to be limited. So it could affect the oil supply. And Iran have actually said that if things get too much for them, they will actually block oil through the Persian Gulf. So that would rocket the oil price. And this chart is telling us that there's a real potential for oil price to rocket higher and potentially above that peak price. So I think it's based on geopolitical uncertainty, as you say. I don't think it's strictly on supply and demand, although obviously these sanctions do have an effect on supply. So it all fits in the equation, I suppose. But there's a real concern here, and this worries me because obviously oil is one of the main, it's one of the main constituents of, business, what drives business. Everybody needs oil to produce stuff, to transport stuff, for heating, whatever it is. If oil price goes up, inflation will go through the roof. And this is the one thing that's stopping the US at the moment. We've got this battle going on between Trump and Fed Chair Powell over interest rates. Trump wants interest rates lowered. Powell says we can't lower them yet because inflation's elevated. Now, if oil price rockets like this, it's going to push inflation through the roof. And that's going to be a problem for business, and it's going to be a problem for assets. So we'll look at those assets in a moment and just see what the long-term outlook is. But I'm just saying, we've been saying for some time in recent shows, past few weeks and even months, that there are some warning signals flashing, some warning signs flashing that there's potentially trouble ahead. But if you remember, I did say not yet. And that's been correct. Not yet. We've not seen real trouble as yet. So we were right in our call, but I think it's on the way. And I think it's probably going to be 2025. Well, and people ask me about...
You know what else? I almost sent an article over to you, and then I decided that I was going to write a similar article, and I got busy yesterday. But Jerome Powell already started printing more money. I don't know if you read that, but they already started.
I mean, that's amazing because, again, it fits. We've been talking about them printing more money.
We were like, they're going to do it. We're right. They're definitely going to do it. Here we are.
I think we are going to get a final push pump in asset prices before we get the big fall. So I still think there's more fuel in the tank yet for rises, but we're beginning to see the early signs of disruption and potential problems ahead. So I think this oil is really, we need to keep an eye on this because if it continues to rise, and if we break above the $80 level, we're still $10, $11 away from that. But if we break above there, we'll have broken this series of lower lows and lower highs. And that actually was telling us this was a temporary downtrend. But if we break that level of $80, then the sky's the limit, and we could head much higher in oil, and that will be seriously damaging for economies. So I was going to look at the loonie. There's not an awful lot. I actually looked at why it was called the loonie. I thought it was because it was a very erratic, crazy currency, but it's not. It's actually because of the loon bird on the $1 coin in Canada. That's why it's called the loonie. all these currency pairs have names like cable is the pound against the dollar, and it's because the pound and the dollar used to be very closely connected, and so they called it cable, as though it's connected by a cable. And it's also something to do with a cable under the sea that they used to use to transmit pricing data and so on.
Oh, interesting.
But there's names for all sorts of currency pairs. But anyway, I'm going to jump over to Bitcoin here, and I'm jumping into the I'll go into the monthly, the real long-term chart here, because I want to look at a potential scenario of where we're at with Bitcoin. So potentially that big move up we had to remember some time ago, we had a 69,000, which held for a long, long time. Then it crashed down in the FTX crisis to about 15,000, didn't it? From the 69,000. So I'm proposing that 69,000 was actually wave one up. And it actually makes sense here, because if you start from here, right at the bottom here, we've got a wave one, wave two, wave three, wave four, wave five. There's no overlap. It fits all of the Elliott wave rules. It's absolutely perfect. So I propose that's potentially wave one. It could be a wave A. So it could be an ABC, or it could be a 1, 2, 3. We cannot tell the difference as yet. It is impossible to tell a difference. But whether it's ABC or 1, 2, 3, following that, you'll get a serious correction. So let's just assume for now it's 1, 2, 3. We'd like it to be 1, 2, 3, because that would tell us there's massive new all-time highs to come. And it's just the beginning of a massive growth in Bitcoin asset prices in the years to come. So we'll assume it's 1, 2, 3. So we've got wave one now. We've got a perfect ABC wave two, and you'd expect that for wave two. Normally wave twos are quite deep compared with the wave one. And we can see the pullback was deep from 69,000 to 15,000, very deep three-wave pullback there. Then the next wave was very clearly made up of 5 waves. We can see it 1, 2, 3, 4, 5. So that gave us a wave 3, so a larger wave 3. So we've got wave 1, wave 2, wave 3. Now you then expect this to be a wave 4. According to Elliott wave rules, wave 4 cannot overlap into territory of wave 1. So we can see here, wave 1 peaked at 69,000, we've already said. So that would tell us that if the price of Bitcoin falls further, if this is indeed a 1, 2, 3, 4, 5, wave 4 cannot dip below 69,000. So that actually puts a floor on the potential price of Bitcoin dropping. If this wave count's correct and actually looks pretty good, it would tell us that it can't drop below 69,000 in this current fall. So this is what we've been saying yesterday. This is an opportunity potentially when we see falls in the price to buy the dips, not to chase prices higher, but to actually buy dips in the market. So if we do see a further dip, and we will look at this one in a bit more detail to see potentially where we're at with this ABC move down, because after this wave 3, you would expect there to be an ABC. So that's what we're looking at. Just quite interestingly as well, and I didn't even have this planned at all, but I'm just looking at a very, very clear divergence from the peak there to the recent peak in price, the all-time high. We actually look at the solid candle body we have to use for divergences, so it's to there. So we can see a massive increase in the Bitcoin price there. So the price peaks inclining. But if we look at corresponding RSI, we can see from the massively overbought situation back at just before 69,000 to the all-time high there, massive regular bearish divergence. That was telling you exactly where price was going to turn. So, and we're not just looking back on this. This signal was there when the price peaked. If you looked at the monthly chart and thought, Bitcoin price going to peak out, well, we had the perfect signal. It was here, and prices sold off quite sharply from that 100 and whatever thousand it was. What was it, Bruce? 109,000 or something?
109 with the top.
109,000 was the top, yeah. So from 109,000, and today we're at 87,000. So percentage-wise, that's a pretty serious fall, and it's predicted beautifully just by one of our most simple indicators that we use. But it's not only the most simple; often simplest is best. And here we have one of the most simple indicators giving us a perfect signal of a top And now we'll just open out. We'll go on to probably daily, I think, to look at where we're at in the market. So this is the peak that we were talking about, the 109,000 peak. Here was 109,000 peak. Now this is, I've labeled it as an A wave down. Now it could actually be an ABC, and we could already be complete this correction. So potentially we could already be pushing higher, but I'm proposing that the movement down so far is just an A wave. And I think we're working on a B wave higher, and I think we'll get a further C wave down. But remember what I said, the C wave cannot drop below 69,000. So I put the line in there, that dotted line, where the price cannot go below if our wave count is correct. So if this is a B wave, we can then expect a C wave down. But if we get around these levels, it'd be a fantastic risk reward setup, wouldn't it? Because we can actually put a stop loss just below. Price of, let's just say 70,000, you bought in at 70,000 with a stop loss just below at 69. So you got a tiny percentage risk to the downside, but then you got from 69 to 109, you got probably, close to 50%, 40, 50%. Plus you get beyond that, you get to 120 odd thousand on Bitcoin then. So the risk reward's amazing. Massive upside to minimal downside. So this is why I'm saying potentially buy the dips. But even at the bottom of this A wave, that was a good time to buy a dip, but don't chase the price higher. If we look at the moment, I don't think that the B wave is yet complete. I think we've probably got a bit higher to go. We've got some nice green candlesticks there. We're followed by a red candlestick. This is looking like a bullish hammer potentially. So if we see a bit more recovery in Bitcoin price, then potentially we are going to see a little bit higher. And I've actually put the B wave in, as you can see, a little bit higher here, maybe 90,000-ish for Bitcoin as a potential target for the B wave. We do already have, and it's not on this particular time frame. In fact, we could actually see it on this time frame slightly. There's a bit of divergence there, a bit of you can see we've got a downward slope in the price peaks, and we've got an upward slope in RSI, corresponding RSI peak. So there is actually some hidden bearish divergence there, telling us that potentially price is about to turn here. So there are some risks that the B wave is complete. So as I say, I'm not buying or selling at the moment. I would just be looking for a fall in price, ideally as another buying opportunity. So maybe I bought here, but if it falls further, I would just add to it again in our usual dollar cost average fashion. So try and average your position to get the best out of the market. So I think that's reasonably clear about what we expect. But if we just go back to that long term, that monthly long term for Bitcoin, I think it was monthly we were looking at. And we said we've got 1, 2, 3, 4, and then potentially a fifth wave higher. Well, if it is a fifth wave higher, it's either an A, a B, and a C, or if it's a fifth wave higher, whichever it is, you'd expect a substantial correction. Now that would fit. Again, I always like these things. I look for correlations and for asset prices to kind of make sense and fit together like the pieces of a jigsaw puzzle. So if this peaks out here and then we get a substantial fall, that would fit in very well with this potential for an explosion in the oil price. And especially if it's geopolitical issues, I don't think it's going to be purely tariffs, but these tariffs could actually evolve into a full-blown trade war. That's possible. China have actually said they're ready for war, and they said they're ready for war on every front, and they're actually also making threats now against Taiwan, which America have said they would support Taiwan. So there's lots of risks floating around. Very, very worrying times. So I think we are going to be continuing to climb that wall of worry, though. I do think that we're going to see new all-time highs for Bitcoin. But once we see those all-time highs, for me, I'd be seriously thinking about where do you put your money? Which safe haven do you put your money into? Is it Bitcoin? Is Bitcoin going to be that digital safe haven asset? Is it gold? I mean, let's just have a quick look at gold, where we're at. Here we are. Gold, we got nicely above that 3,000. I said we're probably going to get over the 3,000. Interestingly, Price is just above 3,000 at the moment, and our target was just over 3,000. It's actually, I think, 3,000 and got it at 3,017. We're right now 3,023. So this was a potential line in the sand, but actually we did say that gold price is going to go higher. So if you're looking for a safe place to put your money, if trouble does hit, is gold the place it should be? Gold is a store of value in times of trouble, but it does also get hit when there is turmoil, when there's economic turmoil, certainly. So gold is one area. I think the real answer is still to diversify, because nobody actually knows which asset is going to be totally safe. Is it treasuries? Is it gold? These are all traditional safe haven assets that we need to be thinking about if the market does peak out. When I say the market, the risk assets, Bitcoin, S&P, etc. So we'll just flip over to the S&P here. We can see again, looking on the long-term chart, I think S&P still has higher to go, because we've got long-term, we've got wave 3, wave 4, and pushing up in a wave 5, I think. And we can see this candle is, if we do push a bit higher, we're going to end up again. This is beginning to look more and more like a bullish candlestick, maybe a bullish hammer candlestick, if price continues higher. So we've already got a wick below, quite a long way below, where price tested lower, it failed, and it's pushed up higher now. So it's beginning to look bullish. But again, I'd just keep my eye on it. Maybe it's just an A wave with a B wave and a C wave down to go. So I wouldn't be chasing prices higher. As I say, even with this, I'd be waiting for pullbacks to potentially add to my position. Looking at the US dollar, and I suppose it is related to the loonie. I will just jump back into that loonie because it's quite interesting there. Seeing the loonie, so the Canadian dollar actually pushing up quite powerfully there. I mean, if oil price does go up, I mean, these days, the Canadian dollar is based more on their internal economic performance and so on, but they still have quite a close tie to oil prices as well. And if we see oil price rise, maybe the Canadian will continue to rise. But we're actually round about relatively long-term support here. Right, when I say long-term support, we're talking for almost 10 years, 9 years. Price hasn't really managed to stay below this level for the Canadian dollar. So this, although we just pierced it slightly, but we've actually managed to get back above. So it's still actually a significant level of support for the Canadian dollar. So there's potential for the Canadian to go much, much higher here.
This is the first time in like 15 months of doing the show that we've ever talked about the Canadian dollar.
Yeah. I don't know if you mentioned it yesterday. I heard you talking about loonie yesterday. So I thought, okay, I'll take a look.
Oh, okay. Yeah. All right. Yeah.
Yeah. So, but it is interesting that, following all these, this long-term sideways movement, that we actually did bounce off this long, I want to say long-held support. It's right the way back to January 2016. So it's 9 years ago, over 9 years ago now, that we'd not managed to break this support. And we just, as I say, just momentarily broke below, but we've actually now, we bounced off it pretty well, and we're well above. So there's a real chance for Canadian to push higher. That would potentially mean dollar weakness ahead, Canadian strength, dollar weakness. And that may actually be helpful. I think Trump, he wants the dollar to be weaker, doesn't he? From everything I've been hearing.
It's hard to say. I'm not sure he sticks with one thing. He might change his mind tomorrow.
Yeah. So here is the DXY, looking at dollar index. So this is the dollar, of course, against a basket of currencies. The main constituent of that basket of currencies is the euro. I think the pound is possibly the next one. There's a whole basket of currencies there, the yen, so a lot of the main currencies. But as I say, it's mainly euro. And we're actually, remember we mentioned the other day that there's been a massive swing of investment away from America into Europe. This is actually quite significant. Probably not what Trump's looking for. And as you say, he says one thing, but whether it's what's actually happening, he talked about all the companies that are relocating back to America. Well, the actual fact of the matter is that investment is actually coming out of America, especially since Trump came in. Investment has been flowing out of America and into Europe, believe it or not. And Europe has, had its own troubles. But that's what's happening, and that's why the US dollar is continuing to fall now. So, we've got quite a substantial move down here. It's looking as though it's probably likely to continue. So this weakness of the dollar is just really a result of money flowing out of the US dollar and into other assets, other currencies, etc., investment in other parts of the world. So that's why, in particular, the euro has strengthened against the dollar recently, because investment flows. And that's what drives, money flows around the world, is where is it more attractive to hold your assets. So it is a bit worrying, all these tariffs, as you say. Let's hope Trump has a bigger plan that he's maybe not really told us about. But he's got a lot of people worried, and the markets are a little bit concerned. So let's just see. Dollar yen, actually, we are seeing this is actually probably quite good for risk assets potentially, that we may see another little push up in dollar yen, because if we see dollar yen pushing higher, that normally is correlated with risk assets. So this is looking at the moment like a bullish candlestick, a bullish hammer, especially if it pushes a little bit higher, it would be really bullish. But we do need to wait for the end of the month to see how this actually finishes out, because it can be a mistake to look at a candlestick before it's actually finished. In fact, it's a serious mistake to do that. So I'm just saying it looks like it at the moment, but let's wait for the end of the month to see how this finishes. If I just go over to the daily here, you can see we did break support there. So there is a concern still in my mind that we're going to dip lower with dollar yen. So that would tell me there's going to be some sort of risk event in the market to drive prices lower again. And again, that would fit with my Bitcoin thesis and other assets. But I think we may well just be finishing a B wave, about to push down in C wave. And if that happens, we will see dollar yen pushing lower. And it could be for a number of reasons. It could be that the Japanese actually raise rates again, which I think they are going to. I think they're due to possibly at the next meeting. Raising rates, that means money flows again out of the US dollar into other currencies like the Japanese yen. They've got raising rates, whereas the US are looking ideally to lower rates, but they can't because of inflation. So this again is more about money flowing out of the US, and I don't think that's really what Trump is looking for. He's looking for money flows in, and this is what he talked about. I listened to he had a press conference yesterday, and he was talking about I think $3 trillion worth of investment coming back into the US, companies relocating back to the US. I'd like to see the evidence for that, because the actual evidence is entirely the opposite. The actual evidence on the ground, the data is telling us exactly the opposite, that money is going out of the US into other economies. So, I question that. And I think we just need to look at facts, not about what people say. So it's not what they say, it's what they do. I think you mentioned that particular saying before.
Yep.
Yeah. So
we'll have to, because I had to get my youngest my oldest she's hurt her knee or something. So I had to get her to the doctor. Yeah.
Definitely time to tie up then. We've still got some somewhat lowers to go with Solana before we get a big push up. So we'll leave it at that. Solana is my favorite asset. I wouldn't buy it just yet, though. I'd wait for another dip in the market, and I'd look to buy Solana, my favorite asset, to go to new all-time highs. Let's leave it on that optimistic note. Hope your daughter's okay, and catch up soon, Bruce. Thank you.
Thank you, Matt. It is always a pleasure.
All the best. Thank you. Bye-bye.
All right, and with that, folks, we are going to wrap it up today. As I just mentioned, I got to get my oldest to my good friend who has his therapy thing or whatever. Cheers. See you guys tomorrow. All the best and all that good stuff. I'll finish with our friends with 2Bit. And remember, we're doing Bitcoin Palooza again. We're doing Bitcoin Palooza in Las Vegas. Really excited about it. I think May 28th is what we're looking at. So super excited about that too. Cheers.
Hey, Randy, I got another home run for us, man. This 2Bit exchange is absolutely amazing.
Hey, Bruce, what's up, man? Yeah, why don't you tell me about that 2Bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID, and let's set you up with a trade copy system, and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you can hook me up with the trade copy system. I can't wait. Sounds spectacular.
Hey, Matt. Hey, listen, I met with the guys at 2-Bit Exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2-bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2-Bit, Toobit. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're going to like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
I mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. Makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously with all the years of experience that we can pack into it, and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey, David. Yeah, man, I'm excited about it too. I mean, when you think of the ways that we can help our viewers earn money and be able to participate in the monetary revolution, this 2-Bit platform just opens up all kinds of doors that they don't have right now.
Hey, Bruce, I'm checking out this platform. It's revolutionary.
That's absolutely correct. And the futures platform is amazing. Great liquidity. And the copy trader program, people are going to be able to make the trades exactly when we make them and make the money that we make. It's a win-win for everybody.
Open for U.S. customers, and you can deposit money with a credit or debit card. Doesn't get better than this.
Beautiful. And what do you think we should use as a referral code?
I think we should use Impact Money. That's the one. Impact Money.